Basics of Forex trading. These are the lessons under basics of Forex trading. We have types of financial markets, major currencies, currency pair, types of currency pair, major and common currency pairs, base and quote currency, exchange rates, quotes, difference between technical and fundamental trading. So types of financial markets. These are the types of financial markets we have. We have the currency market, which is the money market. We have the metal market, which is gold, silver, platinum, and the likes. We have the stock market. We have the bond market. We have the commodities market. We have the derivatives market. And we have the cryptocurrency market, and many more. Major currencies. We have 8 major currencies in the world. These currencies are the most traded currencies in the world, and they are listed below by their symbol, the country where they are used, their currency name, and their nickname. Currency symbol always have 3 letters, where the first 2 letters identify the name of the country, and the third letter identifies the name of the country's currency, usually the first letter of the currency name. Those 3 letters are known as ISO 4217 currency codes. By 1973, the International Organization for Standardization, which is ISO, established the 3-letter codes for currencies that we use today. Let's use USD for example. US stands for United States, YD stands for dollar. These are the major currency, which is the 8 major currencies in the world. The symbol, the country, and the currency, and also the nickname. So Australia, which is AUD, the symbol. Australia is the country. Currency is dollar, while the nickname is Aussie. We also have CAD, which is CAD, Canada. The country is Canada, the currency is dollar, while the nickname is money. We also have CHF, which is Switzerland. Their currency name is franc. Then we have the nickname, which is Swizzy. We have EUR, Eurozone, Euro, and the nickname is Euro. We have GBP, Great Britain, and their currency is pounds. Then the nickname is Cable. We also have JPY, which is Japan. Their currency is yen, while their nickname is yen. We have NZD, which is New Zealand dollar. The currency is dollar, while their nickname is Kiwi. We also have USD, which is United States. Their currency is dollar, while the nickname is BOK. These are the major currencies in the world. The currencies included in the chart here are called the majors because they are the most widely traded currencies in the world. Currency pairs. Forex trading is the simultaneous buying of one currency and selling another currency. Currencies are traded through a broker or a dealer and are traded in pairs. Currencies are quoted in relation to another currency. All currency speculations are mainly carried out in the Forex market. As Forex is a global market, it does not have a particular trading place. It is represented by a vast number of trading participants connected by communication channels. Trading deals are made via telephones and computers. All over the world, the markets never stop working, as there are always people or institutions ready to sell or buy a currency in the market. Forex is an interbank market. It takes the first place among other segments of the currency market by the trading volume. Currency market investors are attracted by exchanging one currency for another in stated volumes as it brings big profits. Almost every convertible national currency can be traded in the Forex market, but the most traded currency are the United States dollar, which is USD, Euro, Japanese yen, British pounds, and Swiss franc. In short, a currency pair is a pairing of currencies when the value of one is relative to the other. For example, Euro USD is the value of the European euro related to the US dollar. Here we have types of currency pairs. There are 3 types of currency pairs. We have the major currency pair, we have the crosses, and we have the exotic. You can see here we have Euro and we have United States dollar. So this is called currency pair. This is the currency and this is another currency. Before you can trade in the Forex market, you need to pair 2 currencies together. So we just pair Euro against United States. That's why you see Euro USD. So this is a currency pair. This is a base currency, while this is a quote currency. So major currency pairs. These are the most traded currency pairs in the world, and they consist of the largest share of the foreign exchange markets, about 85%, and therefore they exhibit high market liquidity. So the major currency pairs have high liquidity and they are traded mostly by a vast number of players, which are the market makers, the intraday traders, the individual traders, banks, and the likes.
Major currency pairs have high liquidity and they are traded mostly by a vast number of players. The majors include 7 pairs, which are represented by a quote of the United States dollar and a currency of one of the world's most significant countries. The majors are called so because the currency they include are considered to be the most stable. Most market participants prefer major currencies. About 80% of all operations on the forex market are performed with majors.
They are Euro USD, which is the Eurozone against the United States dollar, Euro dollar. We also have the USD JPY. We also have GBP USD. We also have USD Chef. We also have USD CAD. We have AUD USD. And we have NZD USD. Cross currency pair. Cross currency pair are currency pair that exclude the US dollar. They are less active than the majors. This group includes, we have the Euro GBP, Euro Chef, Euro CAD, Euro AUD, Euro NZD, Euro JPY, and the likes. All these currencies doesn't have USD in it. The pairs don't have USD in it. Exotic currency pairs. Exotic currency pairs are made up of national currencies of less significant countries. Together with the US dollar, there are a lot of them, including USD, RUB, USD, MXN, Euro, DKK, etc. It's not recommended to use those currency pairs as they have big spread and low liquidity. Besides, it is difficult to forecast their movement and they are not very popular. So I won't advise you to trade this kind of pair because they have big spread. You will get to know about spread in this class. Just keep on following the class. Consequently, most market participants prefer major currencies. About 80% of all operations on the forex market are preferred with the major currencies. Base and quote currency. The first currency in a currency pair is called the base currency, while the second currency is called the quote currency. Base currency is the currency in front, while quote currency, also known as counter currency, is the currency that follows. So you can see here we have Euro and we have United States dollar. This European currency is the base currency, which is this Euro is the base currency, while this USD is the quote currency. You can see we have Euro in front, while we have United States at the back. So we have Euro by the left side and we have United States dollar by the right side. Right? Euro is the base currency while the United States dollar is the quote currency. So looking at this chart, the value of the base currency is expressed in the units of the quote currency. So the price of the base currency is always calculated in units of the quote currency. For example, the exchange rate for the Euro USD pair is 1:1233. So looking at this now, looking at the chart, presently 1 euro is worth 1.1233. 1 euro, for example, if I have euro and you have dollar and you want to collect my 1 euro, you will have to give me 1.1233 US dollar to collect my 1 euro. You will have to give me 1.1233 dollar to collect my own 1 euro. Let's say I have 10 euros. You have to give me 11.233 dollars to collect my 10 euro. So you can see here we have Euro USD. Looking at this chart, this is a blue candle. This is a bullish candle. This particular candle is a bullish candle because the market is going up, while the red is bearish candle, the market is going down. So here from this level to this level, Euro gained strength. Don't forget I said earlier that when one particular currency is gaining strength, automatically the opposite currency is losing strength. As Euro gained strength here, United States dollar lost strength. So when Euro is losing strength, automatically United States dollar is gaining strength. So the base currency was the one gaining strength here, while the quote currency, which is the US dollar, is the one losing strength there. So you can see presently the price of Euro USD is 1.10145. So meaning if I have 1 euro and you have $1.1, you will have to give me your $1.1 in order for you to collect my 1 euro. The exchange rate of one currency to another one is set as a result of the interaction between demand and supply. This is usually called a quote. We have two types of quotes. We have the direct and the indirect quotes. Difference between technical and fundamental trading. The technical trading is the trading that involves price action analysis and candlestick reading, prediction of the chart movements. Technical traders trade the price movement, while fundamental trading, this involves trading the news, and it is a trading where you analyze the market by watching TV, listening to the radio, and listening to news, and also economic calendar for the prediction of the next movements of the currency price. Different ways to trade Forex. Because Forex is so awesome, traders came up with a number of different ways to invest or speculate in currencies. Among the financial institutions, the most popular one are the retail Forex, the sports FX, the currency future, the currency options, the currency exchange traded funds, and the Forex CFDs, the Forex spread betting.